Hey everyone, John Henry here, SlingshotFutures.com. Welcome to the Daily Futures Market Outlook for tomorrow's trading, tomorrow being the 20th of the month. Already, man, it feels like this month just went by. As slow as the markets have been, it definitely has been a really quick month. And starting off the week with a pretty big sell-off on the index markets. We're finding a lot of selling pressure coming into the indexes. And really across the board, okay volume. Unfortunately, most of that volume didn't really start kicking off until around 11 o'clock. Go figure, right? And that's usually when everyone's going to lunch. But aside from that, overall, not too bad of a day as long as you remained patient and waited for those trading opportunities. Now, before we jump on into the charts, as always, make sure to swing it over to SlingshotFutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to register for our email newsletter list to be notified every time one of these videos comes out. Along with that, in the video, or in the email rather itself, we go over a bunch of stuff that we just don't have time to talk about in this video, and that's going to be everything from stocks, options, crypto, you name it. If it's moving, it'll show up in there at some point, and it's a great newsletter to get your hands on so you don't miss anything, so make sure to sign up for that. If you haven't done so already, click on the live trading subscription and trial info. From there, you'll be able to register for a 3-day free trial in the live trade room, so you can hang out with us for a couple days in the room and see what all is going on. Now, lately, the last couple mornings have been a little bit slow since everything has been starting to kick off at 11 o'clock. But aside from that, it's a really great way to kind of hang out with us for a couple days, see what we're all about, see how we trade, see how we approach the markets, and just ask some questions and hang out. So make sure to sign up for that if you haven't done so already. Now, looking at the charts, a couple things that jump out. Obviously, the euro, I reloaded my chart a couple times here because it looked like my charts were wrong. We have this big old gap over the weekend, and that left behind a lot of movement. Now, that left behind a big gap, and that's down at 22,920, and that's going to be an area of interest. The markets don't like leaving those big gaps behind. Now, over the weekend, you will see those a little more frequently, but usually not this big. I mean, keep in mind, they did pull back a little bit, but that gap started here at 22,920. We didn't open until way up here, and by the time they pulled back and started rallying again, they didn't even come close to filling that gap. So that weekend gap, that's going to be a big bullseye for quite a while until the market rolls over and grabs that. Now, with the gap that big, sometimes when you run away and it just never comes back. Well, you never want to say never when it comes to the markets, but it could be, weeks to potentially months before you see that fill in. It could be tomorrow. That's the thing with the markets. It's hard to kind of say when they're going to fill those kinds of gaps, but as we always say, gaps always fill. It's just a matter of when they're going to fill. So on this one, with that big of a gap and a run away from there, likely we're going to see a little bit more bullishness coming into the market, but it's hard to ignore the fact that we're cycling off of resistance at 24,435. Sellers are hitting those highs. This is the last time we came back. Last time we came back to this area, the market did not like it at all. We rejected it very aggressively, even on that news, and those are those high closes and high opens. So with that amount of rejection there, when we come back to it, we definitely want to be paying attention to what happens when we hit it again, right? And in this case, well, they hit it again, and it rejected it again. So obviously, there are a lot of sellers that are waiting to sell that area at 24,435. We have created a very strong leg to the upside, and with such aggression higher, it has to be an area of interest just in the lows of that big leg up. We kicked it off, they gapped up, they tried pulling back and filling that gap, they didn't even come close, and then went flying to the upside. So if we do come back down to those lows, I want to see if the buyers want to defend that location. For right now, we have a very strong rally to the upside. I mean, keep in mind, each one of these candles is 4 hours. So we have 12 hours of just straight up movement on the euro, and that's after a big gap to the upside. So, even though we are cycling off of resistance here at 24,435, I am still leaning on the buy side in the overnight session, assuming that the buyer's going to want to buy a pullback. And I don't want to buy way up here, but if possible, zooming into maybe a faster time frame like an hourly, you might be able to find a little bit of a pullback. If we look at an hourly here, maybe looking for a little bit of a pullback at least, maybe something like this where it dips back, kind of traps below those previous bars and goes flying higher. We have kind of the same situation here. We tapped into resistance, it's now rejecting it. It wouldn't be that bad to see 1 or 2, maybe even 3 or 4 hours of pullback before looking for continuation to the upside. But the overall assumption is that the market will regain these highs again that it's put in at that level, just given the amount of bullishness to the upside that we have so far. So going into the overnight session, waiting for a pullback, but I am looking to go bullish in the overnight to try to push the market back up towards those highs. Over on gold, gold has had a pretty strong lift to the upside as well. Now that is coming off of, a little bit of back and forth, and something to be said, we've been keeping an eye on this zone down here. I think the best way to draw it up would be around here, finding some buyers there, buyers there, buyers there. We even found a little bit of buy bouncing here, and now that we've broken back underneath it, they use it as resistance, tried pushing down, failing to break to a new low, and now we have a very strong rally to the upside. Now, all of that combined, if you add that story all together, what that creates is a situation of potential bottoming. Now, like I always say, it's not my job to try to call a bottom or a top. My job is to be in about 80% of that move. And, well, right now, this is one of those situations where I don't necessarily mind saying that this might be the bottom here on gold, at least for the foreseeable next couple weeks, maybe even the month, just due to how this is playing out. We have a major low. Right, they have a huge amount of buying pressure, We were talking about how it might be a low back here, and when they dip underneath that, it immediately goes down and then snaps right back up again. That looks like a trap. So I'm still on the buy side in the long run. This looks like they're trying to put in a bottom, and it just so happens to be that, well, it does kind of create another higher low type of scenario, just like we had back here, right? So we had that little kind of inside swing, they dip underneath it, they trap, and then go flying higher. Kind of the same situation on this as well, just a little bit bigger, right? We put in a low, they have a higher low, they trap underneath it, and they go flying higher. So it's just kind of the same pattern that we've been talking about for the last couple weeks on the smaller area here, just in a bigger view. So I'm still leaning on the side of saying that we might be near a bottom here on gold. And one way or another, we are still underneath the moving averages. We are still showing a little bit of bear pressure to the downside. We have a lot of proof to go that we haven't seen yet from the buyers to really prove, yeah, this is definitely a reversal. We haven't had that yet. For us to actually see that kind of evidence, that, the cold hard facts that they're trying to break, higher, we would really need to break this double top back here. These two little swing highs, well, little, they're pretty big now, but we need to break above those as proof, and we're a long ways away from that. So I think a lot of buyers are going to be approaching this with a mindset of, hey, you know what, I can buy here, I can drop a stop really close underneath it, so my entry point is, wherever inside of here, and my risk is really, really low. Which means that, well, they have a low probability of success because the stop is so close to the current market. But on the other hand, the reward that they're taking on potential for the risk is huge. I mean, you're talking about buyers who are risking, this much to potentially make, let's use purple in this case, this is a 1-to-1, but they're not going to go for a 1-to-1 when the probability is low. It makes a lot more sense to go for a 2-to-1, potentially even a 3-to-1, maybe even a 4-to-1, which would be nearer to the highs. That might even be a 5-to-1, depending on how you measure it up. So let's just say, as an example, the buyers bought above that bar right there. Let's use our stop loss below the low. We'll have to kind of play with it to get it to show up correctly here. But this is going to be kind of the trade lookout, if you will, right? The coordinates, the stop level. Let's do 44 ticks, so it's underneath that low. And if we're looking at a 2-to-1, that would be 88 ticks, right? So 44 ticks, that's their stop below the lows. The 88 tick, not too far away. We're talking an almost $9 move in gold. And that's just getting it started. We could have buyers in here that are looking for a much larger move. I mean, you're talking a scenario where, sure, you have 44 into 88, but, that's only a 2-to-1. And buyers who are buying this kind of move could be looking for 132. That's a 3-to-1, or even going a little bit further out. So again, this is a low probability type of scenario where buyers are trying to put in a low, and they're looking for a very large reward. And when low probability scenarios play out, meaning that they actually come true, those types of scenarios end up usually having a secondary leg. It took everybody by surprise in the first time when a low probability scenario happens. Now everybody has to come in and react to that low probability scenario, and that's kind of what we're seeing right now. So we are seeing a nice lift to the upside. There's the 4 o'clock bell. And honestly, we could be looking for quite a large move to the upside. We have resistance up at 1327.1 and a retest of resistance at 28.8, but if we start breaking through that, we don't have anything until 39.5 at the moment, so there's plenty of open space here on gold to lift higher. Over on crude oil, we're running into resistance once again, same level that we've been at before, and this is one of those scenarios where we had that resistance from earlier coming into play, and that was the same area inside of here and support inside there. We're back to there again. They tried closing above it, it immediately fails underneath it, and traders use it as a selling opportunity, and it worked out really well to the downside for those sellers, but notice that candle went all the way back up and closed on its high. So it doesn't look like the buyers are done. We're resting smack on top of resistance now at crude oil at $62.26. it doesn't look like the buyers are done yet, and it wouldn't be a surprise at all to see them continue into the overnight session. One little problem, though, we're running into the wedge top from the larger wedge highs over here, from here over to here, and that is exactly where we had a bounce now, and we're getting stuck again. So even though we have a monstrous bull bar and a potential bear failure off of resistance, I don't really want to be on the buy side right now because, well, we have huge levels of resistance above us that still have the potential to hold the market down. So this might end up being a trap. And really what I'm looking for here is to see what happens on the next 4-hour bar, right? I want to see them trigger above this and then immediately turn back down, right? Get a nice heavy bear bar to the downside. That would signal a trap above that bull bar, which a lot of traders might end up taking. And if that does end up being a trap, we have the chance of rallying, anti-rallying, dropping down to the lows of where that big bull leg started. And that would be more of the objective that I'd be looking for the sell side. So getting into the overnight session, although I would love to sit on the buy side, the context and location, I just cannot sit on that buy side. There's way too much ahead of us. So I'm looking on the sell side instead to try to drive the market lower. And then the S&P, speaking of lower, the S&P has dropped heavily. We finally broke underneath that rising wedge support. The rising wedge support has been in play for quite a while now, from this low to this low. We came in, we held it for a good 8 hours or so, those two candles, and now we have finally broken out. Now, that doesn't necessarily mean that the sell side is the only side. This is only the initial breakout. Really, what confirms a breakout of a wedge, or really anything, is not just the breakout, but the pullback, right? If we can get a pullback and retest that and then find another bear bar, now you've got some cold, hard evidence that the sellers may want to try to sink that boat right back down to the next level of support at 26.52. Currently, we're holding support at 26.99, and it is holding very, very nicely. That's that strong, strong leg to the upside. Similar situation to what we were just talking about the euro, just backward, where we had a big gap down. Remember that midweek, I think it was on a Thursday or something like that, gap down, and then went flying higher. Well, we're back to that low where that support came in, and guess what? Buyers are buying it right back up once more. So, knowing that the buyers are defending that so heavily at that 26.99, obviously we want to be paying attention to that area. But, you know, is this the low of this move? It's hard to say that this is going to be the low of the move. With this amount of bearishness to the downside, this does look a little exhaustive. They have a nice, consistent, 4-hour bar, just kind of slowly working their way lower, and then all of a sudden the floor drops out and the thing goes absolutely bonkers. Well, that's probably going to be seen from a lot of the sellers as a gift. A lot of sellers have been short all the way from back in here, and here, and here, trying to get that breakout. They finally get the breakout in this monster bar. They're like, holy hell, give me the green. Yeah, good enough. All right, they start exiting. So I don't necessarily think this is the bottom. I just think this is everybody taking profit. We have a big, consistent sell move that's been going on for quite a while, and short sellers who don't believe that we're going to make it to the highs on the S&P, well, so far they've been correct, and, well, I think this is just a way for them to take profit on a big, nice blow-off candle, but a lot of times, after they start taking their profit, we end up going back down again. So what I'm looking for is a corrective phase in the overnight session to potentially resume that selling going into tomorrow's trading. So that's kind of where I'm leaning right now on the S&P. I think you could probably play at both sides now that we are finding a little bit of kind of profit taking towards the end of the day. You might be able to get away with some longs, but man, I think you're playing with a falling chainsaw at that point. They always say catching a falling knife. I think this might be a little bit worse, trying to pick a bottom on the S&P at the moment. So I am looking for a little bit of profit taking, but I would rather sit on the sell side to try to drive the market back down to retest that 26.99. So that's going to do it for today's outlook. Now, looking at tomorrow's news, if we take a look at what's going on, we don't have any U.S. news announcements at all. We don't have anything to worry about here. The only thing that we really have to keep our eyes on is going into tomorrow. It's the early morning traders. That's it. Looking at the filter, we do have the United States check. There is a checkbox in there. But there's no news coming out tomorrow for the U.S. session, and that could be a good or a bad thing. After such a big day of movement today, it might actually be more of a detriment because tomorrow has an even better chance of being slow. It already had a good chance of being slow because of today's movement. Now add on top of that we don't have any news tomorrow at all for the U.S. might be a little bit tough. But tomorrow morning at 5:30 out of the U.K., we have the CPI year-over-year for February, forecasted at 2.8%. And then out of the German side of things, we have the ZEW economic sentiment for March, forecasted at 13.1. But that's really about it. So no U.S. news tomorrow, just early morning news, and that's it. So might be a little bit of a slow one tomorrow after such movement today. We'll have to wait and see. But as always, like we always say, it doesn't matter what market you're trading. Always make a plan, trade the plan, follow those rules, and you'll be just fine. Until next time, we'll see y'all then.